got his internet
No,
figured
we're
out
gonna,
yet?
Dennis. We're actually gonna go to Mish Schneider right now,
Bring
and
in Mish.
yeah, she's been doing her homework. Mish Schneider, founder of MarketGauge, joining us a little bit early.
All right, let's bring her on here, and she's getting ready, so I'll give her a second. I'll just play.
Ah, there we are. Good morning.
I caught you off guard. Hi, Mish. How you doing today?
I'm doing great. I hope you don't hear what's behind me. My entire building has a fire alarm going off.
Oh my gosh!
only-
Get out, Mish! You're gonna burn down. Get out of there right now.
The truth is that it knows how hot Miss Schneider has been, so that's what it is. It's just
that's good.
setting
That's
the
good
alarm there, man. And
yeah.
I hear the alarm also at my house. That's how good it is, you know.
So,
Mish,
Mish,
the drill.
yeah, I hope
You
so.
have me
too.
scared now, Mish. I'm scared for you.
That's dedication. Well,
That
Dennis,
is. She loves pre-market prep so much she won't even leave for the fire alarm.
well, what about when there were fire drills at the Bright office? And we would be like, then they would come and like, you guys got to get out of here. And we're like,
Yeah,
had to leave all the
pry us away
position.
from the screen. Got like 100 day trades on. I'm like, oh great, this is have this.
Let's start with 23. I mean, you want to talk about one of the hardest working people on Wall Street here. I think she makes Ryan Dietrich have someone to look up to. But you put out an extensive report for 23. Just put how'd you do? Put a quick bow on it.
Well, what was interesting was this was the year really to be a technical analyst. And because we have quant models, essentially they all got long in April and caught that big move in the growth stocks, which many people missed. And then from a discretionary standpoint, I really kind of just sort of searched and stuck to guns with certain things. I mean, it wasn't like every trade was a winning trade. There were a couple of stocks that disappointed. But for the most part, I really stuck to what the plan was for me personally, was to stick with Coinbase. I think the last time I was on, we talked about Coinbase when it was trading at like 75, 80, and now it's up, close to 180. And that kind of made my year. So, I've really kind of, for this year, I didn't overtrade. I let the quants do their thing. And here we are now. I'm trying to plan for what I think for 2024. So Modern Family has been, really to me always been my guide.
All right, talk about the Santa Claus rally so far. We had quite the lead up, and it's continuing. How much more legs does it have? S&P all-time highs in striking distance. So we're going to get there.
Well, it's possible. I think the average Santa rally is about 3.7%, and we've already had a couple of percent up since there. So we may have some more. I mean, right now, the market it started out when I woke up early this morning. It was red, now it's green. So it seems to me like the momentum and the amount of money that's pouring in now and possibly can continue in 2024 is showing the signs that this market wants to go higher. And you can't argue with it. I mean, I read people like Harry Dent. I don't know, have you seen his prediction?
No, Harry's a perma bear. There's not a lot of perma bears.
He is, but I mean, he's not just going bearish. He's going like full on. He's going like 86% decline in 2020.
Like he's in a bunker. He's in a bunker right now. That's what
like
you're telling me.
Asteroid hits the Earth, and
he's wearing tinfoil. He has a tinfoil hat on right now.
Right. So I mean, apart from the Harry Dent camp, I mean, you look at somebody like Ed Yardani, and he thinks we're going up to like 5,200. So I think you have to really enter this year, obviously more friendly than not. But, this is, and I know you read the report. So this is coming up the year of the dragon, right? So I love to talk about this stuff because it's such a great metaphor and it makes a lot of sense. Last year was the year of the rabbit. And the year was so much like a rabbit. If you stayed back, if you stayed back with the hounds, you lost out on the rally. If you ran with the rabbit, you did really well. And now we're going into the year of the dragon. And what's interesting is when you say dragon, people go, oh my God, that's prosperous thing. Everybody loves dragons. But the truth of the matter is that dragons, and this is a direct quote from Raymond Lowe, who is one of my gurus in terms of really understanding the whole idea of the Chinese astrology. And I always say, 2.5 billion people can't be wrong. That the dragon can be the gate of heaven or the gate of hell. And I think that's kind of going to be a good theme as we go into 2024, is that you have to really look at the signs. And if, we're seeing all this money coming in and we're seeing things like the Russell 2000 and the retail sector and the transportation sector continuing to hold, and even the regional banks will be a key here as well, then, we're in the gate of heaven. But if those things start to turn, regardless of what's going on, or any of the tinderboxes that we see in the world with geopolitics, people have discounted all of this, or the debt cycle comes back to haunt, or we're in an election year, which is typically very bullish, but the 2 years that weren't were in the dot-com bubble and in 2008. We have any of those kind of watershed negative activities, then we could be entering the gate of hell, or we could be going back and forth. I'm not quite so sure we're going to have this straight up type of market.
Well, seeing how I'm going to have twins this year, that's not too bad because the year of the dragon brings extra blessings and good fortune. But one of the things that we're definitely seeing is this exuberance in the market, I'll call it. And it seems like the greed has really gotten to a whole nother level, right? And if I think about the consumer, because we were talking about this just 2 or 3 months ago, that we could see the consumer slow down into the next year. And then I see stats like that, more than 1/3 of consumers went into debt this holiday season. Things like this are what really scare me when everyone's getting so optimistic. What do you feel is going to happen here? Is something going to break, or could we just continue with this optimism?
Well, what's so interesting about the people in this country, consumers in this country, is that we really don't allow a lot of bad news to last too long in terms of our spending habits. And in fact, we've had the last several months of sort of, let's just go out and spend money anyway. Some people are calling it revenge spending. I was calling it YOLO, this sort of like, you only live once. Let's just go out. Who cares what's happening? There is actually more money. If you look, you mentioned Ryan Dietrich. He actually put out that there's actually more money in people's pockets than one would think. It depends on where you look. I think that the spending habits will change into 2024. And I think what's going to happen is people are like, okay, we got through that. Market's on all-time highs. I still have my money basically safe right now because there's still a lot of money in bonds and things that are giving yields and that are relatively safe. And I think we're going to see the consumer go from, I'm going to spend on travel and dining out and my family, to more, I'm going to spend it on myself. I think we're going to go into like a vanity year with people. And that's why we're watching a lot of areas that have to do with fashion and beauty and skincare, weight loss drugs. All of a sudden everybody wants to get fitter going into 2024. So I think this is a theme that we can continue to see. So we may not see the great rise still in airlines and in restaurants and in some of the leisure like we saw, but I'm looking more for, I'm going to take care of myself this year, and what stocks are going to be impacted in that.
What about commodities? That's one thing that could upset the Fed's plan, right? We've seen some of the commodities come in. Some have stayed at elevated levels. What's your outlook for the commodity in the first half of the year, in the second half of the year, and why?
Well, in the first half of the year, I'm really focused on gold and silver. And silver has really been underperforming gold. And I think that could make a comeback. In fact, I just read that aluminum is at an 8-month high. So these industrial metals are starting to look pretty good. But really, it's the gold that has been telling us, considering where gold is right now, that regardless of what's going on, people are looking at gold as a safety play. And I think that can continue. In the second half of the year, this is the super cycle, right? That people say, oh, Mish, how could you be talking about a super cycle? Look what's happened in commodities. Look what's happened in inflation. It's come down so much. We're going into disinflation, et cetera. And I think that with all this talk of the Fed, my God, I've seen everywhere from 3 to 6 or 8 times that they're planning to cut because of issues that they're seeing with the slowdown of the economy, even though we're not seeing it in the stock market, that could be where the super cycle comes into effect. And what's really interesting, and I know I sent this chart with my report, is if you overlay the CPI from 1966 to 1982 to what's happened in the last 20 years here now, it's almost a complete, utter mirror image in that in 1975, when the rates peaked, just like they did here in 2022, we had this big dive down to CPI went from like, I don't know, like it was like 10% down to about 2%, just like we saw here in 2022, now down as we're entering 2024, we've gone up from 8 or 9% down closer to the 3%. And then in 77, things started to come back hugely. And so if we look at that point, what happened? The dollar went down, the Fed got more accommodative, money started pouring into the market thinking recession was over. And then all of a sudden geopolitics took control. And I think that and also weather, we're having some people are talking about shortages, not just in rice, which is global, but even I've heard now that there's going to be concerns about some of the grains here in this country. So I think second half could be more, the super cycle comes back when it comes to some of the food commodities in particular.
All right, Mish, I hope you don't upset too many people here, but what do you think about the EV market?
Yeah, well, right. I think that's the one place I may not want to be in 2024. Now, listen, long term, we're definitely going towards an EV type of market. But I think what happened in this year is that people got too overzealous about infrastructure being able to support EV cars. I mean, yes, you charge at home, but as soon as you get on the road, you have an issue. There's a glut of EVs. Used EVs are not selling. We get the shiny penny rallies like we saw in NIO launching a new SUV. Tesla, obviously, people are very, very bullish. But I actually would avoid the EV space. And I'm not necessarily thinking Tesla is going to go much up past 260. And I think it's got more room to the downside than the upside at this point. I think that this will not be the year where people will go out and buy EVs. I think they're going to step back and wait and see what happens with infrastructure and how realistic. We have a power out. You can't get your car charged. You can't go anywhere. And we saw that happen this year with storms. So that's why that's not the area I want to invest in.
I think they're just too expensive too. I mean, Ford has figured out, like, we've got trouble here. We put out this truck. It's a really cool truck, the Lightning, and this ticket price is just way too high. They've tried to drop the price, and they're trying to figure out how to do this properly. I mean, Tesla's figured it out. But, I mean, these are not cheap vehicles. And, despite the economy humming along, it's really been like the Apples and, obviously I've been talking smaller ticket stuff that's really hummed this economy along. I just don't think there's a lot of people that can afford, an $85,000 or $90,000 truck, and they're cool. And I mean, they're like, I've seen the Lightning and the Rivians are awesome too, but it's expensive. And I mean, interest rates, we can talk about interest rates going lower and maybe they do eventually afford those, but interest rates at this moment in time are still very high. I got a buddy trying to find out and he's trying just to finance a car here. And he's like, the financing rates are 7.5%, 8% here right now. I mean, that is not and even if they go down to 7 or 6.5, it's still not that easy for people to just get financing on a $100,000 vehicle.
Absolutely. I think that's what I'm saying. I think there'll be a wait and see. Like, I'm not going to buy an EV in 2024. Let me see what happens in 2025. If rates come down, if the infrastructure improves. But right now, that to me is not where I would think, just like you're saying with your friend, with interest rates being so high to put the money. I mean, even with the housing market is kind of so aberrant too, right? So you still have high interest rates, but you have housing prices go up, but yet home sales going down. So there are a lot of these areas. That's why I'm saying I think people are just going to say the heck with all of that, buying homes, buying cars. Let me just focus on myself. I want to look better. I want to feel better. And in this year, that's really where I'm going to put my money.
Well, that's a great segue into a couple stocks that you like, Cody and Elf. And this Elf has just been a beast. So talk to us about those two stocks.
Well, Cody is something that, it's only trading about $12.50. And so I think that's got a lot of upside. That could definitely wind up being closer to a $20 stock. Yeah, Elf has made a big move. Listen, we know that certain things can go totally parabolic. I'm more focused on Cody than Elf. I'm also, watching stocks like Estee Lauder, though that's a higher level brand. Obviously we've seen great returns in some of the other cosmetic type stocks. I like that. I like Ralph Lauren. I like, some of the other type of fashion stocks that we've been looking at. But, at this point now, I also really like, by the way, some of the medical cannabis space. That's another area we've been looking at, to just move away from that for a moment. AbbVie is one of my top picks for 2024, ABBV. And the reason why is because they are actually using more and more cannabis in terms of their medical research. And what that tells me, and we had a big rally in cannabis yesterday in general, but I think if the big pharma starts looking more towards that area, that's going to put a lot of lobbying pressure on federal regulation to ease up on cannabis. And that stock looks particularly ripe. It's trading at around 150. I'm looking at around 144 as a good buy opportunity. And we can really get through this 155, 160. I see no reason why that stock can't fly. And there's a couple of others in that space to keep an eye on. Altria would be another one, MO. Believe it or not, even Molson is also getting into recreational beverages with cannabis. I just feel like this is part of the feel good, the theme that I'm looking at. So it's not just makeup and weight loss and fashion, but also like, hey, how can I feel better too?
Yeah, Ozempic plays into that, right? And this whole kind of move, right? I think that we're all trying to better ourselves and consider more mental health. And I think that this all kind of weighs in to what we're seeing. And we're even seeing developments in the psychedelics market and things like that, right? I think that you're definitely seeing a move towards that. So I like the vanity year mentioned. Going to have to put that in quotations there. Definitely keep your eyes on that. And there's a lot of these stocks that have been hot. Now, one stock that I've thought about, and it's been kind of a laggard, but I'm looking for technology stocks that just maybe haven't gone. What about Roku?
Yeah, well, Roku, by the way, one of the things about this year is that the whole idea of entertainment, that's another thing, streaming and entertainment, Roku would be one of those. That also could look pretty hot. I keep an eye on it. That's another one that's been very volatile. But, I think the theme is no matter what I'm talking about, even though I think we can see, obviously, any of these stocks outperform, and I just want to quickly put up a chart of Roku here so that I'm looking at it with... Yeah.
There's a couple other media stocks that you like too. Why don't you give us those as well?
Yeah, Live Nation would be another one. I've been watching that stock forever. It hasn't really done that much. Oh, here's Roku. If you look at Roku on a daily chart, obviously it looks good. But if you look at it right now on a weekly chart, it's been basing since 2022. So we get through like 110 in that stock. That might be something really worthwhile. And then the other one would be, and I see that a lot of these streaming stocks now are starting to do merger deals, what they call bundling. I think bundling could be a theme. Live Nation's another one. It hasn't really been able to get through 95 to 100. That would be another area. So these are stocks that I wouldn't necessarily be buying right here, but I'm waiting for, particularly if the market stays hot, for these to be really good catch-up stocks. Again, all in the idea of vanity, feel good, going on with this you only live once attitude, but with more of a shift.
Got to ask you about a couple more here. And Triple D wants the Triple D symbol. And I guess you don't think it's going away anytime soon here. You mentioned it before. What do you like about 3D Systems?
Yeah, and I think last time we were on, we talked about the fact that the intellectual property of 3D Systems is tremendous. It was the original 3D printing stock. And so they have IP. And they have been swirling around with a takeover. Stratasys, they've been talking with all these different deals. Desktop Metal would be. They're all involved, and I sniff something coming up in terms of them being bought out by, I'm not sure who, or maybe they collaborate or merge or what have you. But 3D Systems, I read the CEO started buying the stock at $4.50. So we started buying the stock at $4.50. Why not, right? I mean, it was like, really, could it get much cheaper? And now the news has come out that they're looking at $18 a share. Last year was $24 a share in terms of a buyout. They rejected that. Rumor is they may reject the $18 a share, but why do they keep rejecting these higher prices? Obviously, they know something. And so I'm going with it. It's trading at, what, 7.25 as of yesterday. I mean, I'll probably take some profit. I don't buy and hold. That's not our thing. We are very much active traders. We get certain parameters. We take money off. We raise our stops. So I'm looking right now close to a 200-day moving average resistance, which means I'll probably take some off and then raise my stop. But yeah, I like that. Gets through 8. I don't see any reason why. I mean, it can continue to go up to maybe 15 or even 20.
And a lot of times what we see in 2024 in the first week of January is a laggard effect. I've been talking about that on the show, and this stock has been a major laggard for a very long time. So I think it sets up well into January here. If you think some money might come into some laggards here, and obviously, move, maybe from some of the leaders, if we get some profit taking there, maybe this is a stock that benefits.
Yeah, absolutely. I mean, would it be my top pick? No, but I think it's certainly a fun stock that could. And like I said, there's definitely a lot of chatter going on with that company and what I'm reading in terms of takeovers. And of course, like I said, the CEO himself went out and bought a whole lot of stock.
You got it. All right, Mish, put a wrap on it for us for 2000 or for 2024. Where are you expecting? We're talking to you for a year from now, an election year, seasonality. Put a wrap on it.
Well, I think that in terms of the small caps, again, like you're talking about the laggard effect. Well, obviously, we've seen this incredible rally right here in small caps. And I think that in an election year, I mean, statistically, every year has been great, except for the 2 that I mentioned, that we probably, though it won't be in the growth stocks, I think that we'll continue to see more rotation into the small cap area, into the areas I just mentioned in retail. But I do believe that we have to keep our eye out for everything switching. I wouldn't necessarily dismiss some of the perma bears because we could have a credit event. We could have a major situation geopolitically. Things are not dying down. In which case, by the middle of the year, if we can hold 4,600 in the SPY, to me, that would be a signal that we could see a much major correction. So as long as we're over 4,600, and as long as we're over about 2,000 in the Russells, we're good. We break those levels, I would start to get very nervous.
All right, Mish Snyder, Market Gauge, joining us here on Pre-Market Prep. Great information. We'll talk to you again soon.
Happy New Year, you guys.